Hi everyone, welcome back to our channel. Today we are diving into the power of multi-time frame analysis using one of the most reliable tools in technical analysis, which is the demand and supply zones. We'll explore how to spot these key zones, understand the price behavior around them, and how multi-time frame analysis can give you that edge you have been looking for. So stick around as we explore them step by step. So now, why use multi-time frame analysis? Different time frames can show various market dynamics. For example, a demand zone may be visible on the daily chart, but not on the hourly chart. By analyzing the multiple time frames, we can gain a holistic view of the market, enhancing our trading strategies. Using this method allows us to identify the most relevant zones for our trades, increasing our chances for success. Let's look into the steps involved in this process. So we start by marking the key supply and demand zones on a higher time frame like the daily or the weekly chart. These zones are represent the areas where the price could potentially make a significant reversal. So we should always remember that the higher the time frame zones are, the more powerful they are since they represent a strong institutional activity. So we should be thinking of them as our roadmap because they can guide us in understanding where the price could head in the long term. Next, we drop down to the intermediate time frame, like the 4-hour or the 2-hour charts, to see if there are any mid time frame zones lying within the higher time frame zones. For example, if there is a 4-hour demand zone within a daily demand zone, we can take the entry in this 4-hour demand zone. So with this, we can clearly identify where exactly our entry should be. So the higher time frame zones gives us the direction, whereas the mid time frame zones gives us the precision. So lastly, move on to the lower time frames like the 15 minutes or the 1 hour chart to see if there is any price action like the breakout or breakdown in conjunction with our direction planned to enter into the trade. So let's look at it with an example. So I have taken this chart of LTIM entry because there are a lot of interesting things here. So LTIM has recently broken out of a weekly triangle pattern and it's now retesting key demand zones. So this is a high probability scenario for a potential bullish spike. So after the breakout, LTIM is retesting significant demand zones. So for the higher time frame, I have taken the weekly time frame. So let's plot the demand zone using the rectangle tool and switch to the intermediate time frame for which I have taken daily. So here we have a daily zone. So let's mark that zone as well. So the confluence of both these zones provides us a powerful confirmation that the price will go up. Next, we can zoom into the lower time frame. So here I have taken the 1 hour chart to see if there is any price action. So here I can see it is respecting a trend line. So I'm waiting for this trend line break to enter into the trade. So the target can be the next supply zone on the higher time frame or any higher time frame resistance level. So here we have taken a weekly demand zone. So we can probably look out for a weekly income trade here. So let's quickly run through the time frame. So if you're someone who's looking for a daily income trade or an intraday trade, you can take the higher time frame as daily, intermediate time frame as 4 hour or 2 hour, and the lower time frame as 15 minutes or 5 minutes. And if you're looking for a weekly income trade or a monthly income trade, you can take the higher time frames as weekly or monthly, or daily for intermediary time frame, and a 1 hour for the lower time frame. So before we wrap up, let's talk about few common mistakes one can make while using multi-time frame analysis. First thing is overcomplicating the setup. Don't switch between too many time frames. Just stick to 3 to 4 time frames to avoid the confusion. Next is ignoring the higher time frames. Always start with a bigger picture before diving into the smaller time frames. So ignoring this step is a fast way to enter into bad trades. The third one is not waiting for confirmation. It's tempting to enter into trades right away, but patience is the key. Always wait for confirmation of price action in the zone. I highly recommend you to try our demand and supply zones indicator and screener because it can save ample amount of time. The indicator can plot the supply and demand zones on whatever time frame you switch, and the screener can filter out all the stocks on your watch list that are currently in any zone in whichever time frame you select. You just have to toggle between the time frames, and if you find any stock that is present in both the higher time frames and mid time frame, pick them up straight away. This way, you can instantly spot opportunities without spending hours looking through the charts. So you can get access through the links in the description. Do check them out. It's a real time saver. So that's it for today. If you found our strategy helpful, make sure to hit the like button and subscribe for more trading tips. Thanks for watching and happy trading.